Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope all of you had a very good day of trading. And in today's markets, guys, well, we got the inevitable tiny little retracement after a massive 10 days worth of rally. No real macro or economic news to warrant us being read today, just a normal market pullback that we've kind of been anticipating now for the last couple of days. Now, in terms of today's trading activity, guys, it was a very, very light day. Take a look at the volume bar down here. Let me just put a line on it and you will see that it's one of the lowest volume days here, guys. Ooh, let me just readjust it right now. One of the lowest volume days that we've pretty much had all year. Yes, all year. We have not had low volume such as this, which leads us to ask the question, why? Well, usually this happens, guys, when we're about to have a very big piece of data that's about to get dropped on us. And that piece of data is tomorrow morning. You might have heard about this on Twitter or in the media, but tomorrow we are going to have what we call initial jobless claims, but we are going to also get the annual revision to the past 6 months worth of jobs data. More specifically, guys, that jobs data is most likely going to get revised to the downside. So let's take a look at the headline here in anticipation of tomorrow's data, which could stir some things up quite a bit. So Fed confronts up to 1 million US jobs vanishing in the revision. Let's take a look at this here, guys. A look at preliminary estimates in recent years. So here are your estimates. Goldman Sachs sees a 600,000 to 1 million jobs decline in the upcoming revision count. They do this once per year, and here's some results of the last 5 years worth of data, where they either revise to the downside, as you can see in many years, or even to the upside, such as in years like 2022. So tomorrow is definitely going to be a big one, guys, because we know all of the focus right now is on the jobs market. We know that the Fed has two mandates. Number one, price stability, which AKA means bringing inflation down. They have now completed that job. But have they hurt the jobs market too much in the process? That'll be the focal point of tomorrow. So take a look at some of the news article right here. A downward revision to employment of more than 501,000 would be the largest in 15 years and suggests the labor market has been cooling for longer and perhaps more so than originally thought. Take a look down here further as well. As it stands now, the Bureau of Labor and Statistics data shows the economy added 2.9 million jobs in the 12 months through March 2024, or an average of 242,000 per month. Even if the total revision is as high as 1 million, monthly job gains would average around 158,000, still a healthy pace of hiring, but a moderation from the post-pandemic peak. So although the numbers are going to get revised to the downside here, guys, and could be a big revision, they would still be quote-unquote healthy. But we obviously know that the market can react very violently, especially now in times of uncertainty, to less than favorable jobs reports. You only have to go 2 weeks ago to see what happened after our last non-farm payrolls jobs report came in under the expectation. So even though we might get a downward revision, which shows that there are still jobs being created in the economy, maybe not as fast as people wanted, the market may not like it, guys, and we may get a more severe pullback. Now, obviously, that is entirely speculation for tomorrow, guys, but you obviously have to understand that the markets are very, very, very nervous now for any unemployment data that comes in heavier to the downside than expected. So it should be a very volatile day of trading tomorrow, and possibly why the volume was so low today. People just waiting on the sidelines for that. So in today's video, guys, what we're going to jump into right away is number one, we're going to be going over two company earnings that I have prepared for you guys. Those are going to be Lowe's and Toll Brothers, which both had earnings today. Now, for the rest of the week, we obviously have some other big names. Tomorrow, we'll get a bunch of retailers, Target, Macy's, and TJX. After the close, Snowflake should be a good one. And then on Thursday, we do have a number of other companies too, but earnings season is largely wrapping up. In terms of the remaining economic data, well, tomorrow we obviously have that jobs data, which is going to be huge. We also have manufacturing and services PMI. Those should be very interesting too. And then we have the Jackson Hole Symposium with Jerome Powell. That was the same event in October of 2022 that he literally crashed the markets, guys. Now, we're not expecting him to do that this time around, but should be interesting to hear his points of view, updated points of view, after the most recent jobs data has come in under the expectations. Expect him to get asked questions on the jobs market, and especially expect him to get asked questions about the September rate cuts. So that being said, after our earnings reports here, guys, we're going to go through our major technical analysis rundown of our major market stock indexes, and then dive into our big tech names, see if there's any deals to be had there. And lastly, wrap it up with a view into my portfolio And I did create the AKA dumpster diving time machine price portfolio for about 20 different companies that are absolutely crushed in the last 4, 5, 6 years of trading. So we built it, guys, and now I need your help to add the last 4 remaining pieces to our portfolio puzzle. So we'll be going over that in the very tail end of the video. So without further ado, let's jump right into today's video. So SPY down about 0.16%, not too bad of a drop. QQQ down 0.21%. And the heat map, guys, was largely mixed, but mostly to the downside, right? You really didn't have any major outperformance to the upside. The brightest name in the entire S&P was Eli Lilly and also Palo Alto Networks after their earnings from yesterday. Big tech, though, fairly mixed, did have some nice gains here, but semiconductors selling off. Financials also very mixed. Nice to see Visa and MasterCard continue to outperform. And PayPal too. PayPal's been on a heck of a tear ever since we stopped following it closely on the channel, right? Maybe it just doesn't like to have people looking at it, right? Maybe it just gets shy to have gains. So when we stop looking at it, that's when it usually has gains, right? Moving on down, healthcare, very mixed session. And the bottom half of the market too led to the downside by energy, but just very mixed market overall here today in anticipation of tomorrow's jobs data. You can see that even better here on the one-day relative, guys. Energy, your loss leader to the downside, but everything else really mixed in between, right? So before we get into more technical analysis, guys, let's jump right into our earnings reports for today. And we're going to start off with a very good one. It's going to be Lowe's. So as a reminder, guys, we got Home Depot of last week, and Home Depot was saying that the consumer was deferring large renovations because interest rates were high, and also because they gauged that consumers were uncertain about the status of the economy. So coming into Lowe's earnings, were they going to say the same thing? That is what we were looking for, guys. And quick little hint, they pretty much said the same thing. But let's jump into their numbers, shall we? Their earnings for this quarter were actually fairly decent. So a nice little beat on EPS here by about 3.39%, but they did miss on revenue by 1.42%, and they also lowered their guidance. Now, they didn't drop very much on the earnings day today. As a matter of fact, you can see that the stock is really only down about 1%, even off of negative guidance, but that's because analysts had largely priced in this decline in consumer spending, as voiced by not only Lowe's for the entire year they've been guiding about this, but also we did get Home Depot's earnings last week. So a lot of the news so far seems to be priced in. Let's jump into a few of the numbers here. Lowe's cuts full year outlook as it expects weaker home improvement sales. No surprise there. Home Depot was saying the exact same thing. So on Tuesday, they cut their full year forecast as the retailer's quarterly sales decline, and it projected weak home improvement spending in the second half of the year as well. Now, here is your negative guidance, guys. The company said it now projects total sales of between 82.7 and 83.2. The midpoint is about 83, compared with the guidance of 84 to 85. So miss on top line revenue. Now, comparable sales to fall by 3.5 to 4%, compared with the prior forecast of a decline between 2 and 3%. So comparable sales also trending to the downside and lower than the expectation. And finally, the earnings per share crush as well. The expected EPS for the end of the year should be about a midpoint of 11.80, comparing between a midpoint of about 12.15. So once again, triple miss on your guidance, unfortunately. In an interview with CNBC, the CEO, Marvin Ellison, said consumers are waiting for the Federal Reserve to cut interest rates. He added, shoppers are also under pressure from the economic backdrop. Literally the exact same thing we got from Home Depot, so really no surprise here. Inflation remains high, he said, and big ticket purchases are being delayed as customers sit back and wait for interest rates to fall. So really no surprise at all. Lowe's posted a year-over-year sales decline for the 6th straight quarter, exactly the same as Home Depot, guys, about 5-6 quarters of lower than expected sales in a row at this point. Nothing really more notable to say than that about them, right? So let's move on. CEO told CNBC that the medium and long-term outlook for the home improvement industry is bright. So here is your longer-term secular trend, as we call it, right? So we know now we're in a little bit of a bumpy economic environment for the consumers, but what are the long-term trends for home improvements? Well, here's what the CEO had to say. The industry is looking bright. He said, U.S. housing stock is aging. More millennials are forming households, and baby boomers are choosing to adapt their current homes rather than move as they get older. All factors that will boost the segment. We're just waiting for that inflection point to happen, and when it happens, we believe that we're in a great position to take market share, which is why I still remain very bullish on Home Depot and Lowe's as companies for a longer term portfolio. But we know now, guys, in the next maybe 6 to 12 months, it's going to be a very bumpy landscape for these type of stocks, right? So moving into the valuation, guys, there really wasn't anything much in their actual earnings report that warranted us moving over it, right? It's kind of just business as usual with lower than expected sales. Take a look at Lowe's profit margins too. I mean, Lowe's does have margins to withstand some of these blows, right? So their net margins usually on a yearly basis are anywhere between 7 to roughly 9%. And so far, they have been doing a good job over the last couple of years of really insulating those margins. Take a look, your gross margins are still about 33%. Your operating margins are still in the high or low teens, rather 12, 13%, exactly the same as Home Depot. And your net margins here of anywhere between, as you can see, 7 to about 9%. Home Depot is slightly higher in terms of operating and net margins, guys, just because they cater to more professionals, right? That is really one of their demographics that helps the company post higher margins. So moving on into their valuation here, guys. In terms of valuation, revenue growth 3% per year, EPS growth about 5.8% per year. You can see those numbers almost compare exactly to what Home Depot's forecast is too, right? About 3 and 6% on revenue and EPS. So almost the exact same. And their valuations too, in terms of PEG ratios and stuff like that, they're all the same as well. So moving into the valuation here, guys, at $240, they have a forward PE of about 19.9. 19.9 in the grand scheme of Lowe's history is about just standard here, guys. If we want to pull it up, right, PE ratio of about 19-20 on a forward basis is really standard with what they've always been trading at. So I wouldn't say that they're at a steep discount right now, and they're not either at a rich valuation. Pretty much the exact same as Home Depot, kind of right in the middle right there. If we divide this by their EPS growth rate, we get a PEG ratio of 3.44. But as I keep reminding you guys, right, when you have EPS of under 10%, the PEG ratio is usually not the best. You usually want to use the PEG ratio for growth companies, not so much value and defensive companies. That's why we use a metric more in tune for those value companies, which is the free cash flow yield. And at 6%, guys, it's great. Anywhere of a free cash flow yield for a legacy company, guys, right? A company that's 25, 30 plus years old, very stable and consistent growing company. Usually you would expect free cash flow yields when a company is at a nice discount of anywhere between 3 to 3.5 to about 5%. Now, there are exceptions, of course, but that's usually the norm. So for them to be at over a 6% free cash flow yield right now, that's very good. Home Depot has the exact same markup too, guys. Free cash flow yield of about 5.1. So Lowe's has them slightly beat there, but I wouldn't say it's anything really to scream home about, right? So the valuation is decent in terms of the company's longevity, guys. I still like the company down here at about the 220 versus 220 down to 205 range for maybe a little bit of a short put play perhaps, or put credit spreads down here, or maybe call debit spreads if you're trying to play some upside. It's kind of tough for me to chase it up here, guys, especially knowing that we're in a very rough consumer landscape right now. So I'm really not expecting these stocks to essentially blast to new all-time highs anytime soon. So we can be focused on buying the dips on them. And in my opinion, anything really, call it 215 and under starts to be a little bit better of a deal for me personally. I personally like Home Depot a little bit more as a overall company. They're a larger company and they do have a lot more of a professional customer base. Only 25% of Lowe's customers are pros versus Home Depot that has about 50%. So usually Home Depot gets a lot more recurring sales for their contractors because their contractors are usually always working, right? Whereas Lowe's caters a lot more to the DIY crowd. Those are the crowds that really get turned off by economic slowdowns more so than professionals, which always have industrial and commercial contracts that they can do as well, right? So that's pretty much everything we had there for Lowe's. Not a bad report, but obviously fairly weak in terms of the economic landscape right now. Now, moving on to our second company, guys, that we're going to be covering, and this is a very interesting one. This is going to be Toll Brothers, right? So Toll Brothers coming out with earnings after the bell today. They are a more luxury home builder. If you've never seen Toll Brothers' offerings, I really suggest that you look at them closely, guys. They are extremely well-made homes, extremely, extremely beautiful homes as well in terms of the design, in terms of the architecture. Here's just a few of their models, right? These are all basically they're built, not so much built to order. They're not so much custom homes. They kind of always have about 5-6 different templates that they can use for a community and then kind of build them up from here, right? So they look very, very, very gorgeous, guys, right? But they are usually high ticket homes ranging anywhere between the $900,000 range and about $2 million at the real top end if you get the best of the best in terms of quality materials, right? And they operate really across the entire United States. So let's jump into some of their earnings results real quick, and we will see, guys, that this quarter, they really did a good job again. So beat on EPS by about 9%, beat on revenue by about 0.72%. Let's take a look at a few more of their numbers compiled here by one of our by one of the analysts here on Twitter, of course. So this is by Consensus Gurus. You can see the beat that we highlighted as well. The gross margin as well of the company came in at a beat. SG&A expenses are lower than expected, so that beat as well. And they did have that famous beat on EPS. But where did they miss? And we need to derive whether or not this is a trend or not, because this has been happening now for 2 consecutive quarters. They missed on new orders by quite a wide margin, by about 300 homes, guys. That is a lot of money, especially when your average selling price for a home is in excess of $900,000, right? That is literally $30 million that they're missing out on. Now, deliveries as well, miss on there, and a also ever so rare miss on your backlog. 2 quarters in a row now where we're missing on orders and missing on backlog activity. I wouldn't say 2 quarters is enough to derive a long-term trend, but it's very interesting to say the least. These should be the most watched things for the next few quarters for your home builders. Now, in terms of their fourth quarter, so in terms of their next quarter guidance, guys, they did have a beat on their guidance for the next quarter, beat on the, or slight miss on the gross margin. Operating margin for next quarter was better than expected. SG&A expenses coming in lower than anticipated too. And for the overall fiscal year 24, guys, well, deliveries came in over the guide. Your gross margin came in above the guide, SG&A expenses as well, and you have a beat on EPS, largely your most important factor as a whole. So all in all, guys, very decent quarter for Toll Brothers. A lot of beats here, some very good guidance from the company as well, but I would keep a very close eye on the orders, new orders, of course, and the backlog, the pipeline that the company is building up, because that is now 2 consecutive quarters where these have come in substantially under the expectation. Let's take a look at some of their highlights here from the company. So the company now expects approximately $600 million in share repurchases in fiscal 2024. That's pretty decent here, guys. That is about 4.4% of the total outstanding float. So a very decent amount of buybacks for the company using that free cash flow wisely. Now, moving on further, sorry guys, that this is a bit pale of the company. It's really the company's font. It's not really mine. Net signed contracts were up year over year, approximately 11% in both units and dollars, with July being our strongest month in the quarter. We are also encouraged by our solid deposit and traffic activity through the first 3 weeks of August. With mortgage rates at their lowest point in a year and trending lower, favorable demographics, and continued imbalance in the supply and demand of homes for sale, we are optimistic that demand will remain solid through the end of 2024 and into 2025. So there is your guidance. They see still strong and resilient demand. That is what we were looking for. Based on our third quarter outperformance and our expectations for the fourth quarter, we are raising our full year guidance across all key home building metrics, which is what we just saw when we looked at the numbers. We remain on target to achieve our goal of operating from 410 communities by the fiscal year end, representing 11% community count growth this year. So obviously, you know, guys, when home builders start building homes, they build entire communities, right? Not just a few homes here and a few homes there. They usually start with about 100, 200, 300, 400 homes in what they call a community, and they build out the entire community as a whole, right? Parks, the homes, everything you might need in a community. So here is your expansion details right down here. The company ended the fiscal 2024 third quarter with approximately 72,700 lots owned and optioned, compared to 71,800 1 quarter earlier and 70,200 1 year earlier. So they are increasing the amount of lots outstanding that they do have to plot all those homes onto. Now, and also the ones that they already have with homes built on them, right? So in the third quarter, the company spent approximately $375 million on land to purchase approximately 2,100 additional lots. Very nice addition from them. And they ended the quarter with 404 selling communities compared to 386 last quarter and 345 just 1 year ago. So they are expanding very decently, guys, across all metrics. All in all, a very decent report from Toll Brothers. But as I said, just keep a close watch on their orders outstanding and also their backlog for future times. Now, in terms of the valuation here, guys, let's take a look at Toll Brothers. So revenue growth of 5.3% per year, very decent. EPS expansion of about 8% per year. And this company, guys, really has no problems with profitability either. You can see their net profit margins usually in excess of about 10-12%. Very decent net margins for a home builder because obviously catering to a higher demographic customer, they don't have to give as many incentives and deals to get people to buy their homes, such as subsidizing financing, which is a lot of other companies like D.R. Horton, KB Homes, and Pulte Group are doing, whereby, let's say mortgage rates right now are 5.5%, and a lot of people think that's way too high to get a mortgage on. Well, the home builders, a lot of other home builders, they will subsidize lower interest rates. They'll take a hit on their margins, but at least they'll get the product out the door. So if the standard interest rate right now is 5.5%, maybe you can get a home through them at 2.5%, right? But who is taking that hit? The home builder, until they can refinance in the future at a lower rate, right? So in terms of the financial health of the company, you can see not too much debt in relation to the cash they have on hand and the amount of free cash flow that they bring in on a yearly basis. No problem there. In terms of your expansion, take a look, guys. Very nice EPS growth over the last couple of years, but you can see now very stagnant around the $14, $15 per share mark before a potential increase in 2027. So the next few years, a little bit of flat EPS growth. In terms of revenue as well, you can see here, revenue also not expanding that nicely in the next 3 years, but should at least hold its value right now. So this is definitely a company, guys, that's performed very, very well in the past, roughly, let's call it about 2 years worth of trading, right? But is this trade potentially coming to an end? Because we saw that you won't really have much EPS expansion, and you also won't have much revenue expansion either over the next couple of years. Well, I kind of think so here, guys. The only thing that these companies have going for it are the long-term secular trends of there just not being enough supply of houses in the United States in relation to the demand at hand, right? So we'll see if these companies are able to maybe get a little bit better pricing power, able to increase their output as well, and whether or not demand resumes to the upside and is able to kind of kick these companies off to a new growth trajectory. But as of now, the growth remains fairly flat over the next couple of years, which is why the PE ratios, guys, across most home builders are very, very low. It is a extremely cyclical business. They can have tremendous rallies, but they can also pretty much stay flat for darn close to about 7-8 years, right? So this has been a phenomenal rally so far, guys, but I have my issues into the sustainability of the rally. That being said, PE ratio is extremely low and the PEG ratio is very good as well. Toll Brothers, this one for me is not really a long-term portfolio addition right now, but at least in the short term, if I do see it come back down, maybe to the lower 120 down to about 105, this level of weekly support, I may be tempted to make some swing trade attempts at it because we know that the company's fundamentals at least are not going to deteriorate over the next few years. It's just that they won't be improving growth on a massive exponential scale either, right? So we have to be kind of picky with our levels right now, in my humble opinion. And that's pretty much everything for Toll Brothers. So hopefully you guys enjoyed that as well. Now let's dive right into our technical analysis portion of the video, shall we? So moving into the SPY, as you guys can see, nothing much has changed. Huge bounce underway. And what are we looking out for here, guys? To see that our daily consolidation is underway, well, we need the loss of the hourly time frame. You guys can see hourly time frame pretty overbought right now. The 4-hour time frame as well, verging on the overbought conditions too. So we'll just be watching, guys, for the loss of the hourly time frame in the regular market hours. If ever we cut today's lows, pretty much 557.43, that would be a hourly downtrend shift. We would also probably be losing the 12 EMA in the process, and that could be the start of our daily consolidation. Where are we going to be looking out for daily consolidation here, guys? This area seems to be a pretty good one to me. 546 down to about 538. Big area of previous support for the markets, and all of your moving averages are sitting there too. So we will see very closely tomorrow how the jobs data comes out and how the market reacts to it. but there is a longer term inverse head and shoulders pattern that could potentially be on the watch if ever we do start pulling down into this area. But as of right now, guys, the bulls are in absolute full control of this market once again. Even on the weekly, guys, beautiful weekly move to the upside right now. In terms of the weekly bounce is over 80%. So even if tomorrow's news leads us into maybe another new daily downtrend, just understand, probably looking for a weekly higher low for possible trend expansion later on in the year. Now, moving on to the QQQs, same concept on the Qs, right? Huge engulfing move by the bulls. Still no daily uptrend for that. They need to set up for the daily higher low for the higher high and get the daily uptrend back. That being said, we are on the watch for a loss of the hourly time frame. If you get an hourly downtrend, you obviously know that your daily move higher is done, and then we're just going to be looking for that daily higher low for possible daily trend expansion. Where could we get it? Possibly in this location right here. 467 down to about 456. All of your moving averages are there too. So we'll keep a close watch on these markets over the remainder of the week to see if we do pull into this area and how hard do we pull into this area as well. Now, moving down to financials, look at this move on financials. Beautiful two-step process of recovery, setting the daily uptrend in motion, but now struggling a little bit at the all-time highs. So if ever the bulls cannot mount and close above, break out, retest, and run, well, we may just be looking to consolidate a bit lower before getting a second attempt at that all-time high. So if we do start consolidating lower, guys, anything above 42.14, just looking for a daily higher low for possible further trend continuation to the upside. The weekly is looking gorgeous on financials, guys. Beautiful weekly uptrend still in motion right now, so we can afford even 1 to 2 weeks of pullback. Just gonna be looking for a weekly higher low for further trend continuation, guys. A lot of space created by the bulls over the last 2 weeks of trading, and now they've regained control of most of your major indexes. Moving into healthcare right now, healthcare also moving extremely well, setting a new all-time high again today. And now, guys, we're getting a little bit overbought right now, 4-hour slight overbought conditions, and even on your 1-hour time frames, really oscillating between overbought and not over the past couple of days of trading. So keep a very close watch, guys, on the loss of the hourly time frame. If that does occur, you know that your daily move higher is finished, and then at that certain point, we're going to be looking for a daily higher low, anything above here, right? Two-step daily uptrend right now. Anything above this yellow line right down here, 149, just gonna be looking for a daily higher low for possible further trend continuation. If we do pull back a little bit hard, guys, I'd be targeting this area right here, 151 down to about 150. Even if we lose the daily uptrend like this, right? Only going to be looking for a weekly higher low for possible further trend continuation. This sector usually performs very, very well in the heat of a recession or at least a recession narrative. Beautiful weekly uptrend right now. So we just be looking for a weekly pullback, weekly higher lows for further trend expansion. Now moving into SMH. So SMH coming a little bit down here today, but they deserve a little bit of a breather here, guys. Beautiful rally in the last 10 days of trading and now taking a little bit of time off. Where are we reacting from? This level of resistance that we had posted on the chart, 257 down to about 248. So in the event the bulls cannot get the job done and break above, use it as support and run, well, we'll be looking for a little bit of a daily pullback, right? Keep an eye once again on the loss of the hourly time frame, break today's lows and lose this hourly 12 EMA. Could end up with the hourly downtrend and also could end up with a daily consolidation. Good thing though, the bulls have created a lot of space. Anything above 211, just going to be looking for a daily higher low for possible further trend continuation. I'd be keeping a close eye on this location right there, guys. 237 down to about 225. If we pull back into there, also setting up for a potential inverse head and shoulders, possibly leading into NVIDIA's earnings, which is going to be pretty much, I believe they are next week. Let me just check again. NVIDIA earnings real quick. They're definitely going to move that index, of course. NVIDIA earnings are the 28th. That is literally, yeah, that's exactly next Wednesday pretty much. So that's going to be a big impact on SMH. So any pullback, guys, I will be looking to play individual names down in this location. Probably going to stay with the more solid ones. AMD, NVIDIA, Micron, TSM, ASML, just to name a few. But all in all, the bulls looking pretty good and also putting in a very decent weekly bounce too. We obviously know they lost the weekly uptrend, so now we have to put in a juicy bounce to possibly get it back. And the size of the bounce right now is very respectable, just about 618. So 61.8% gives the bulls enough space to recreate this weekly uptrend in the event we pull back from here. Now moving into the Russell. So the Russell coming down a bit today here, 1.17% to the downside, but the Russell bulls still do control the daily uptrend. So just right now looking for a daily higher low, anything above 204, looking for that daily higher low, coming into a big area of congestion right now. Your major moving averages are right there. And obviously this level has been a huge level of prior resistance throughout the year. So now could be acting as a little bit of support for the bulls as they try and find a bottoming out process to try and continue this daily uptrend as best as they can. In terms of the weekly move to the upside here, guys, well, it was a weekly uptrend before we pretty much gave all of it back. So now a lot of that momentum is lost, but they did put in a decent sized bounce so far. So take a look at the size of the bounce, about a 55% bounce. So it does give the bulls a chance at trying to recapture this weekly uptrend, but we will have to keep close watch, guys, on the data that's coming out tomorrow and the rest of the week, because the one sector that is most affected by recession headlines is definitely going to be your small caps and your growth names. So please be careful on these if ever the data is proves to be less bullish than expected. Now, moving on to the Dow Jones. Dow Jones only down about 0.15% today. Beautiful recovery by the Dow Jones in the grand scheme of things, right? Two-step recovery process and now fully back to where we started off the month of August, pretty much. So looking very good. As soon as this move is topped out and we are, battling with a little bit of resistance overhead. So if this move tops out and we lose today's lows, lose this 12 EMA on the hourly time frame as well, hourly downtrend in motion, you know that your daily consolidation is underway. Then we're looking for anything above 39,250 to be our daily higher low for possible daily uptrend recapture. Now keep an eye here, guys. Even if we do lose the daily downtrend, you do have a lot of space on the weekly as well, right? This has always been a beautiful weekly uptrend right there. So in the event we cannot break through and we pretty much triple top right here, the bulls do have a chance at resetting a bit lower, gaining some momentum, maybe a nice little cup and handle pattern, and then maybe rally into the end of the year. Looking fairly good on the Dow Jones though, all things considered. And lastly, your VIX, the spike on the VIX today has to be quite notable here, guys, right? After declining after a massive spike roughly about 2 Mondays ago, well, the VIX is starting to curl to the upside. And the only reason I think it's curling to the upside today is probably due to that jobs report that we have in tomorrow. So if for every which reason the jobs report comes in very bad and the indexes get absolutely obliterated and we start a new VIX rally here, I would be very interested in shorting the VIX possibly. If we can achieve levels of anywhere between 25 to 30 over the next week of trading, I will be looking for a possible short entry on the VIX. Just don't want, really tough to be playing it down here, guys. I'd rather wait for unexpected moves to the upside and just be shorting the VIX, right? I'd never really play the VIX long just because you could be waiting forever to get a move to the upside, right? It just erodes all the value on your call options, something like that. So usually I just wait for unexpected moves to the upside and short it from there. And this time around, it would probably be about 25 to 30 for me. Now, moving on down here, guys, let's jump into our big tech names and then onto my portfolio. So moving into big tech, Apple 0.27% to the upside. Apple still has not had one single red day in the last 12 days of trading. Looking very good. The bulls pretty much have a controlling move on the markets right now and have put in a sizable enough move that the expected result will most likely be a higher low for possible trend continuation, maybe onto the all-time highs. So looking at Apple, guys, same thing as your SPY and your QQQ. Keep a very close eye on your hourly trend. This, right? We saw this right here. This is not an hourly downtrend. This is a loss of the hourly uptrend because we cut the lows, right? Cut the lower lows, but we did not get follow through with the lower high and lower low into hourly downtrend. Keep a watch on that for tomorrow. If we do get that type of setup here, guys, the move on Apple is likely topped out, and we may just be revisiting the lower levels right here, 220 down to about 215, this 5-point range that's been acting as decent support for the stock and resistance ever since the month of June. That could be a likely pullback location for Apple. On the weekly bounce is looking very juicy as well. We were in a weekly uptrend, lost the weekly uptrend. Now the bulls are trying to get it back. So in the event that the daily move is topped out here and we start retracing, well, we might just be looking out here, guys, for a weekly higher low for possible trend continuation. As per myself, I once again reiterate, I cannot play Apple, guys, up here. The price is just way, way, way too high for me. A very nice company, but keep in mind, guys, the revenue has been flat now for the past year and a half and should be expected to be flat for the remainder of the year as well, unless they have a tremendous upgrade cycle, which largely has been priced in over the last 3 months of trading, right? Unless they have a sizable upgrade cycle, I don't expect Apple to surprise us with their fundamentals anytime soon, which is why I have to be a little bit more conservative, guys. I am only going to start to play Apple down here around maybe the 200 to 195 with a little bit of size. Anything above that, guys, it's just too rich for me. Moving on to AMD right now. So AMD continuing its push to the upside and unfortunately got rejected at the top end. Made it all the way to about 161 today. Fantastic day for AMD, but we were calling out this area of resistance as probably being a stop out zone for that rally on AMD, right? Perfectly natural. It's been a huge area of support, big congestion, resistance for the market and support. So very, very big area of congestion that we're moving into. Probably, you know, it's no surprise that we're not able to get it in one clean shot. Now, what the bulls can do, however, is we are in a nice daily uptrend right now. Any move lower, going to be looking for a daily higher low. Anything above 129, looking for that daily higher low for possible a second attempt at breaking this big area of resistance above us right now. Keep an eye on the hourly trend. As you can see, we really peaked up here, and now we may be looking. If we break these lows of today, guys, hourly downtrend is in motion. You have your daily consolidation in motion, and I will be looking to buy the dips down here, guys. If we can get back to, let's call it the mid $140 range, that will open up short puts in the mid $130 range, open up some put credit spreads down here too, and even open up the possibility for going long with some call debit spreads into the future. Right? So AMD looking pretty good right now, but in a little bit of a pullback coming into this resistance pretty hot right now. In terms of the weekly, well, the weekly move is looking quite decent as well with the highs of today, guys. Now the weekly bounce has gone up all the way up to 618. Very funny how these levels all work out together, right? It was the top end of my resistance box that I haven't moved, and I literally just plot the fib and look, that is literally the 618. Very funny how technical analysis works sometimes. So they do have enough space here, guys, that in the event that we do start a larger form retracement on AMD on the weekly, just gonna be looking out for a weekly higher low to try and get this weekly uptrend back in motion. That's why I like a retest of this lower zone right here, guys. 145 down to 140 could be a very nice location to pick the bottoms on AMD and go for that second leg of weekly uptrend. Moving on to Amazon right now. Give me a very brief second. And let's get into it. So Amazon looking very good here today, 0.37% to the upside. Amazon also really not giving much chance at a daily higher low entry at all. It's just pretty much been straight up over the last 12 days of trading, but very good though. Now we're coming up into this big area of resistance above us, right? 180 down to about 178. This little area right here, which is quite big. In fact, it stems all the way back from the month of February. So in the event that the bulls are not able to get through this location and fill what remains of that earnings gap right away, and we get rejected, we'll just understand looking for a higher low, anything above 152, just looking for a possible daily higher low for maybe further trend continuation. If we do pull back, guys, I will be playing Amazon in this lower location right down here. This is where the 200-day moving average is right here, and where we have right a decent amount of price action in the most recent history. This was the move after 2 quarters ago's earnings. This is the move last earnings, and then this earnings too. You see how fast we reject out of this high 160s range. Seems to be a lot of longer term bulls sitting there. So that's also where I want to possibly position. If we get a little bit of a dip down here, 172, 170, 168, those could be very nice retest levels for a potential further run. Now moving into the weekly bounce is looking fairly decent as well at this point. The weekly bounce size is now just about 55%. So looking pretty good here, guys, even if the bulls lose this temporary daily move higher, and maybe we even set up for the daily downtrend. We'll just know the bulls have a lot of space here on the weekly to possibly reset the weekly uptrend. That's why I'm looking for these mid 160 range for that possible weekly retest in the event the markets have a little bit of a downfall with negative data. Now moving on to Google. Google also not looking too bad today, 0.33% to the upside, and almost coming into our big box of resistance above us. That's 179.50 down to about 171.50. This huge location right here, right? So daily uptrend is very nice on Google right now. In the event this move tops out right here, if we lose the hourly trend into an hourly downtrend, you need to know that your daily move higher is finished. Just going to be looking for a daily higher low. Anything above 159, just going to be for a daily higher low for possible further trend continuation. And if ever Google pulls back here, guys, I will be looking to play it quite aggressively in the lower 160 range 163 down to about 158. That's where I want to be writing short puts. And if we do pull back into there, we can even write some put credit spreads possibly for a few weeks out, maybe between the 155, 150 range, even lower, and maybe even some call debit spreads again, moving to the upside for that continuation. In terms of the weekly, guys, well, the weekly bounce on Google is not the best, admittedly, out of all of big tech. It's actually one of the weakest, only bouncing about 0.38%. Of course, they got bogged down. They got bogged down by a lot of those Department of Justice headlines in the last 2 weeks. So that's probably what's been hindering their rally capacity in the slightest, but at least we are moving well now. If we do retest lower, that is where I will be picking up Google. And obviously, for everyone's reason, guys, we tumble even lower down to the mid 155s, 150s. Huge buying opportunity for Google, prior all-time highs, congestion zone here, and just overall would be a great buy the dip opportunity. That would be 20+% off on Google with such solid fundamentals. That would be an extreme buy in my opinion. Moving on to Meta right now. So Meta also not looking too bad, down about 0.48%, but Meta's been doing a great job of holding the all-time highs, just about the all-time highs right now. So we obviously know, guys, massive daily move higher, looking for a daily higher low at this point, anything above 450, just looking for that daily higher low for possible further trend continuation. Meta is trying to do the breakout retest. It didn't quite break out, but it's trying so desperately to use this overhead resistance as some support, right? There is some support below us right now. That's what Meta is trying to use to try and shape up for that all-time high break. This will obviously be market dependent, guys. Do not expect Meta to do this if tomorrow we have a big drop because of the jobs numbers. The rest of the week maybe goes into consolidation mode. Well, probably don't expect Meta to blast off to the all-time highs, right? Probably expecting a little bit of consolidation. And at that point, I really like if we can find Meta again around the 500 down to about 485 level, that could be a decent buy the dip opportunity for a potential further trend continuation later on in the year. The weekly is also looking very good, as you can see, right? Huge 100% engulfing move. So we do have tons of space, guys, to set up even for a weekly higher low in the event we go into a bit of a consolidation period in the markets for another leg higher. Meta, one of my favorite companies in the market right now. The valuation is extremely cheap, great free cash flow yield. Company is firing on all cylinders. So any and all buy the dip opportunities, guys, I will be playing. Moving into Microsoft. Microsoft also a very healthy day, again, 0.78%. And now we are coming into our big area of resistance, right? 435 down to about 425. This big red box that's held us back several times in the past year. Well, now we're coming into it again. Now, keep an eye on this here, guys. Daily uptrend on Microsoft is clear as day. In the event we get rejected in these levels right now, going to be looking for a daily higher low. Anything above 416, just going to be looking for that daily higher low for a continuation of the daily uptrend. Now, obviously, there's the flip side scenario in which we completely engulf this move and set up a new daily downtrend. Are we healthy enough on the weekly to support maybe a further decline? And the answer, guys, is somewhat in the middle, right? So take a look right here. You can see the bounce size on Microsoft is fairly decent. We are actually up to almost a 50% bounce. So it does give the bulls an opportunity on the weekly to set up for a weekly higher low for possible trend change on Microsoft later on in the year. So looking very good here, guys. I will once again on Microsoft, even though I have bought the dip very nicely in these lower locations, if we get an opportunity to retest maybe the 415, 410 level, I will be looking to play the dip again. If we can come down here, there will be short put opportunities in this green box of support down here, 405 down to 395. There's even going to be put credit spreads opportunities down here, 390, 380, and maybe even some call option opportunities for some continuation rally. So looking pretty good if we consolidate back down there in that location on Microsoft. But as of now, the bulls are moving very well. Moving down to Netflix right now. So Netflix, 1.45%, guys. Netflix today set a new record all-time high, guys. Your previous all-time highs was 701, and the high of today all the way up to about 711. So new all-time high on Netflix today. Congratulations to all the long-term bulls on Netflix out there for holding through this massive drawdown. I actually bought a decent amount of Netflix down here, guys. And I was telling you, it was painful, very, very painful to do it. I did not catch the bottom. I mean, I've been an investor in Netflix for quite some time. My first shares were after this phenomenal run. My first shares were really in the high 200s. I didn't even get any pricing down here, guys. My first buys were about 285, 290. Then I was adding throughout the years. Now my cost basis sits pretty much similarly in those levels, about the high 380s at this point, right? So I am up significantly on Netflix, but it's not a tremendously large position for me, but I'm very bullish long-term on the company, right? So in terms of my total portfolio, I think it's only about 2.5% of my entire portfolio. So it's not that large of a position, but still some decent gains. That being said, guys, new all-time highs. So now what we're looking for is possibly a retest of the prior all-time highs as support. So now we know that we have the daily uptrend underway, right? Beautiful daily uptrend in motion by Netflix. So in the event we have a little bit of a pullback right now, are getting a bit extended on the daily RSI, as you can see. On the 4-hour RSI, we are all the way as high as about 78 right now. And even on the 1-hour RSI, we've been oscillating between overbought and not for all intents and purposes the last week. So Netflix could be due for a little bit of a pullback. Where can we pull back into here, guys? Well, take a look. These two yellow lines that I just drew on the chart right now, prior all-time highs, we are now above them. Granted, guys, we are not so much above them that we can successfully say that we are through them, right? We're kind of still oscillating. However, there's two scenarios for Netflix right now. Either we fail these all-time highs, go lower for a bit of a daily higher low, and make a second attempt at them, or they pull the other scenario, which is a break above the all-time highs, retest the all-time highs as support, and then run. I'm looking for one of those two scenarios. I'm looking for the retest on a break and retest. That would be trade number 1 on Netflix for me. Trade number 2 on Netflix for me is if we start retesting perhaps this lower zone right here, 655 down to about 630. This area on a little bit of a retest right there could be a decent swing trade opportunity to give us a second chance at those all-time highs. Netflix, however, looking very, very bullish even on the weekly too, guys. Beautiful 100% engulfing move. So stands to argue, even if the bulls lose some ground, daily downtrend in motion, right? We know that the weekly bulls have a lot of space on the weekly to be able to set up for the weekly higher low for weekly trend continuation, looking very good. And the monthly is pretty much self-explanatory, right? Beautiful, beautiful monthly trend expansion chart. Great fundamentals, nothing wrong with the business at all. Moving into NVIDIA right now. So NVIDIA down about 2.12%, but really inside with yesterday's trading, right? Doesn't look like much. Now, NVIDIA always obviously with earnings next Wednesday, so not a lot of trading days left for them. Now, what we're going to be looking out for, guys, is a pullback on NVIDIA, possibly into the end of the week, right? So we know that we're in a daily uptrend right now. It's looking very good. So any pullback at this point, going to be looking for a higher low, anything above 97. Looking for a daily higher low for possible earnings, pre-earnings rally, excuse me. So going to be looking for this zone right here, 119 down to about 115, guys. If we can start retesting this range, maybe with red days, Wednesday, Thursday, Friday, if we can get a little bit of a retest of this range, guys, I'll probably throw maybe some call debit spreads for earnings. I don't want to go full call options because they can be expensive, especially leading into earnings, guys. But I will at least throw some form of position at NVIDIA if we can get a retest of 120 down to about 115 prior to their earnings, because then we may have a pre-earnings rally run up, right? So I may close half the position if that's the case before their earnings and then keep some for their earnings. But NVIDIA looking very, very good, guys. Daily uptrend, full control. Watch for a retest of this location. All your moving averages are sitting there too. On the weekly as well, it was a weekly downtrend. Now the bulls have put in a heck of a bounce to the upside, guys. That is over an 80% bounce. So now the bulls do have a lot of chances here, guys, at recapturing this weekly uptrend off of any weakness to the downside whatsoever. But obviously, guys, for some breaks of some big levels, right? Breaks of the all-time highs, or maybe retests of the lower 100s, we're going to need to wait until those earnings, right? So looking good on NVIDIA right now, but just be very careful playing it leading into earnings. Now moving into Tesla. Tesla down about 0.73%, but that's okay. They need a little bit of a break here, guys. Tesla's been on a very nice rally recently, so nice to see them take a tiny little break, only down less than 1%. Daily uptrend on Tesla right now, clear as day, just waiting for maybe a daily higher low to form. Anything above 191, looking for a daily higher low for possible trend continuation. What's good is that all the major moving averages are below us right now. You can see them all right here, nice little zone of congestion. And we have put in somewhat of a decent move on the weekly, right? So weekly was in a nice weekly uptrend. We kind of lost all the momentum they didn't lose the weekly uptrend, but we lost a lot of momentum, right? So now the bulls are trying to keep that weekly trend going. So far, the size of the bounce is somewhat adequate, coming in about 50%. So it does give the bulls an opportunity. If they cannot continue this in one clean shot, which I don't think is the case, they may be able to get it done in the two-step process, right? So myself personally, guys, I can't really play Tesla up here. The valuation right now is relatively rich considering the fact that they're just not growing like they used to, right? I still believe in the company long term. I still have my long-term shares in the company, but in terms of swing trading it, guys, got to be a little bit careful on this one. I would only be tempted to make some swing trades if we can revisit the lower $200 range, then maybe some short puts in the 180 range. Put credit spreads down here, think 170, 165, be very conservative on those put credit spreads, and maybe even some call debit spreads if we make our way down into the lower $200 range. Don't really want to play call options on this one, right? Because it can be very, very volatile and quite expensive on Tesla as well. I'm very hesitant with my call options in this market, guys. The best I'll do is call debit spreads. At least you have a little bit of exposure to it, but at least you're not paying as much as you would on some call options with 3-4 months of time, right? So that being said, that is pretty much everything we're looking out for on Tesla. And now lastly, Palantir. So Palantir looking not too bad, 0.55% to the downside today, a little bit more in the after hours, not too sure why, but that's just the way it goes. So Palantir looking very good. Once again, we are now breaking above and maybe starting to challenge the $35 range, which is the next big area of resistance. However, if the markets turn over and we lose this momentum on Palantir, keep an eye on the loss of the hourly trend. As you can see, we briefly lost it today, but the bulls actually came back, right? So we are still maybe looking for the formation of the hourly downtrend. If you see that clear hourly downtrend loss and continuation here, guys, losing the 12 EMA in a significant fashion, understand your daily consolidation is underway. And then we're just looking for a daily higher low. Anything pretty much above 22, just gonna be looking for a daily higher low for possible further trend continuation. Now we are significantly above our zone of support, right? So keep in mind, this was the big area of support in 2020 and 2021, and we're now about 10% above that. But we know Palantir can move very quickly sometimes. Sometimes it moves 5-6% in one day. So we are significantly away, but this is still my preferred retest location, right? So if we start having daily consolidation, and then let's say the markets overall roll over a little bit and we get daily downtrend, maybe then we find some weekly consolidation on Palantir, bringing us back down to about 29.28. That would be where I want to play the company myself. Chasing it up here, guys, especially at almost a 4 peg, is a very, very risky proposition. So be very careful. I know the company's doing great. We covered their earnings on the channel. Nothing bad to say about the business. They're firing on all cylinders. It's just when we get this high, guys, especially with the market that's very, very nervous right now, you can have some outsized pullbacks. So usually I'm a fan of waiting for those outsized pullbacks, right? Like look at this. On Wednesday, 24th of July, the stock was down for 8% off of no news, right? So we can have those days, which is why if we get a big red day or two, we may be able to find some decent premium for writing short puts down here, maybe some put credit spreads down here as well. And that's pretty much how I'd be looking to play out for Palantir. That's pretty much everything we had, guys, in today's video in terms of our stock rundown. Now let's tackle my portfolio for the trades made today. And then after, we're going to tackle the second portfolio for all those destroyed stocks. All right, guys, so taking a look at the portfolio right now, I will be very honest. There was some opportunities in the market today, just not really on the stocks that I was looking for. I've been waiting for a little bit more of a pullback to throw a lot more buying power at this market. I did take a lot of plays today, but just not that many plays with significant size, right? I want some Google, I want some Amazon, I want some Microsoft and stuff like that. They're just not yet pulling back enough in my humble opinion. And also in terms of the stocks that I was looking for my wheel trades, I found some opportunities, guys, but I'm being very, very, very picky. So once again, today, we did have a very nice day of realized profits, realized over $350. But in terms of new, bigger wheel trades, not that many, but we did still have a few. So before we get into the plays that you'll see here, let's go over a few of the ones that we closed. So the ones we closed today were largely earnings plays. You can see we closed the Palo Alto 290 short puts this morning. We got into them yesterday for $137, closed them for only $4 this morning. So massive win on those. We also closed the, Medtronics. You can see we wrote those here, the 80 lower puts for 22 cents, 22 bucks. We closed them for $1. So another nice win there. And then we also closed the Lowe's 222.5 puts. We got the lows yesterday for about $33. We closed them for about $10, right? So not that bad, very decent day of trading. Then there was also one position that I took literally in the middle of the day, the TXN 190 puts. This was a wheel trade that I really liked. The premium was decent. The amount of percentage to assignment was also very decent too. So we wrote the 190 puts at 75 cents at 11:17 in the morning, guys. And sometimes you just have to get lucky with these things, right? This at 11:17, what's very funny is I literally wrote this contract, right, at 11:17, and you'll see what happened. I did not even know that this was going to happen here today, guys. They had an investors conference call. You can see 11:17 is literally right here. At the start of the minute, I wrote them for 75 cents. Then they had a massive pump with their investor conference of about 3%. So I was able to pretty much take half of those off, right? Obviously, TXN came down thereafter, right? And then kind of consolidated near the tops. But we were literally able to get about 50% on those in, just a few short minutes, right? As you can see here, 3 minutes, we were able to bag, $35 of these 75. So I figured, you know what? Might as well take it rather than keeping it for the rest of the week. There may be other opportunities that open themselves tomorrow with the jobs data. So I figured I should just get in. I wasn't planning on this, but when you get rewarded so quickly, just figure that you should take those gains right away. Those are pretty much all the other plays that we closed, as well as we did also close the Google. We had some Google call debit spreads, right? Some bull call debit spreads. We bought those for about $1.60 each, so $160 each, and we closed them for about $225 each, so about $65 profit per contract. We had 2 contracts, so that's about $130. So today was a very, very good day. Those Google call debit spreads, I'll remind you where we bought them. We just bought them last week, guys, so about over 35% ROI in just under a week of trading. We bought them right down here, and just in a few short days of trading, we were able to close those at a nice profit. I'll be looking to re-enter those if we can get a lower dip opportunity, guys. But though I like doing those small little swing trades. Those are pretty much the ones that I closed. In terms of the ones that I opened new today, just going to be going over the ones that are new, because the rest of the ones, you guys should already know these positions. I've explained them a few times in the past. So we went with some more earnings plays here. ADI, we went with the 202.5s puts for tomorrow morning. Most of these earnings plays, guys, are 2 standard deviations away from the expected move. So I'll give you an example on ADI, right? If we can pull up ADI, I'll just do this one, and then I'll pretty much just tell you guys the other ones, but just so you guys understand, right? The expected move is about 4.7%. So that's about $10 worth of, $10 is 1 standard deviation. So $20 would be 2. So $20 from there, plus being in a big level of support, right? You look at the 202.50s where I wrote them. 202.50s for all intents and purposes is right in this location right there. So really big weekly support level for the stock, as you can see, and it is 2 standard deviations away from the earnings expected move. That's when I take these plays, and it has to be a solid company too, right? I don't do these on just any company. We got $40. We'll see what happens. They have earnings tomorrow before they open. Other plays that we've maintained, right? Everything else is pretty much the same. Still have all the Bitcoin plays and everything. This is a wheel trade for this week. CELH 37.5 puts. Been talking about this one for a while. I like CLH in this lower location right down here, this big support zone. Only 1 contract, guys. I'm keeping it very, very light. Obviously, I could throw 3, 4, 5, 6 contracts at this one, but I'm staying fairly light because we do have somewhat of an uncertain week ahead of us remaining. So in the event that consumer discretionary stocks get hit a little bit, at least I have a little bit of protection. And I also have only 1 contract, so not that large exposure. Disney, I'm not too sure why it says I added Disney here, still the same position. In terms of other positions as well that we've maintained, we went with some Macy's earnings plays too. So only 2 contracts, guys, super tiny. We got 6 cents minus commission, about $5. So this is only $10, right? But they all add up, all these $30, $40, $15, $20, they add up to hundreds of dollars per day for me. That's why I do them, and because they're all very conservative, right? Very, very easy and high win rate plays. So Macy's went with the 14.5s. The expected move on Macy's for tomorrow was about 9%. So we went 2 times the expected move. On Macy's, the 14.5 range is right at this lower level right here, guys. If you want me to show you right, 14.5, our assignment level would be right about here on Macy's chart. Oops, give me a second right there. I'm not too sure why it's not working. So moving on to 14.5, if I can get it real quick. Well, this is very unfortunate. I don't know why it's Oh, it's because it's doing that on my other thing. So it's about here, guys, right? It's just this lower location right here. So lower end of the support, we'll see what happens. Only did it very, very small here, guys. As you can see, we only really threw 2 contracts at this one. So we'll see what happens by tomorrow. Then as well, we also have a few other earnings plays too. So we went with the target ones, right? So these target ones are fairly funny. I'll explain them very, very briefly. Essentially what it is, guys, is I went with the 120 short puts for tomorrow. This is 2 times the expected move. This would be a 20% move for target. We got $20. I stayed very, very conservative on this target play, guys, because I don't like it. It's consumer discretionary, and Target usually does not have the same margins as someone like Walmart. So the $120 mark would be all the way down here in this lower location, right? 120, which is some kind of level of previous support, but I really did it because it's 2 standard deviations away from the expected move, right? So that being said, what's funny about it is I also did one long put for 1 week further at the exact same strike. When I was thinking about how to best play target, my gut feeling is that the stock will drop, but I'm just not sure by how much. If it really gets blown out of the water, then we may drop. But my goal for this stock is for it to drop into the low 120s, but to stay above 120 for this week. That way I don't get assigned and these end worthless, but to stay close enough to 120 that these 120 puts for next week retain a lot more value. So I'm looking to keep these into the end of the week. Obviously, it's kind of like a perfect hedge, right? They're the exact same strike price. The long put has more time on them. The differential between the two is $7. This entire strategy cost me $7, which is why I did it. It's just very, very cheap, right? Now, there's a lot of different ways that you can play earnings, but that's just the way that I'm trying to play this earnings cycle. I'm expecting, right? My gut feeling tells me big move to the downside. So to try and benefit from that, gonna try to hold these, if they stay above 120 by this week, they should expire worthless. No problem there. But if we stay closer to 120, think 124, 125, these 120 puts for next week may just be worth more than 27 cents. So I'll be looking to make money both ways here. There's really not any way for me to lose money other than losing $7, right? So very easy play for you guys to understand. Oxy, this was a wheel trade. Top 5 options plays from Sunday. So we're going to be looking to play the $56 puts. If we get assigned, perfect. I like it at that level. If not, we'll just collect that $25. So I wrote those today. We also went with some SYM 19.5 puts. There's some very juicy premium on that one. 0.5% rule for the remainder of the week. SYM is now significantly above the 19.5. I would be very surprised if we get assigned down there at 19.5, guys. That would be an additional sell-off on this stock for this week of, let's just call it 19%. So crazier things have happened, but that's an unlikely scenario in my opinion, which is why we took it. Then we have TJX, which is an earnings play too. $100 puts, 2 times the expected move at a decent weekly level of support. We got 16 cents for those. And Toll Brothers, which we also wrote. Toll Brothers, these should be worthless tomorrow. They just had their earnings. We just went over them. Nowhere close to being assigned on these, right? Toll, we had the 118s, which was also 2 standard deviations away, 2 times the expected move, all the way down here into our larger area of starting to be support, right? 118 levels. So we're going to collect all of that premium on Toll Brothers tomorrow. And that's pretty much it, guys. The rest of the positions we've already went over, right? So hopefully that was educational and insightful for that portfolio. And now let's dive into the other portfolio, shall we? So we have now built up the second portfolio, guys, which is the dumpster diving time machine portfolio. Call it as you wish. These are all companies, very well-known companies that have been operating for over 15, 20, 25 years. And unfortunately, because of the recent economic times, high inflation, high interest rates, a lot of their share prices have been absolutely getting destroyed over the last 2 years. So we started this idea last week, and our goal was to build a portfolio for only $1,000, putting $50 in each company here, guys. And we need 20 companies. So far, there's about 16 companies in this list, so I need 4 more. I will go over the ones that we did buy here, guys, and you can see that we are at a slight loss already on a few of these names. Very simply, guys, because we paid 50 cents in commission each, which is 1% from $50, right? So we're already starting off 1% to the downside, but you can see that a few of them at least, right? Actually only Estee Lauder is currently in profit. So we'll keep an eye on this, guys. The only goal of this portfolio is to see how it performs over the next year, 2 years. in relation to the S&P 500 and determine whether or not it is a good proposition to buy oversold legacy companies that have been absolutely destroyed in the past couple of years for their recovery, quote unquote, story, right? So here's the company list: Baba, Carnival Cruise Lines, Caesars Entertainment, Dollar General, Disney, Estee Lauder, Helen of Troy, Intel, Nike, Pfizer, Papa John's Pizza, Stanley Black & Decker, UPS, Walgreens, Whirlpool, and Wynn Corporation. So those are 16 companies, guys. All of their charts are pretty much the exact same, just companies that have gone absolutely destroyed, legacy brand names that everybody should know, right? So you can obviously see, right, this is Dollar General, absolutely crushed, right? Dumpster diving time machine prices. I want to find companies at dumpster dive levels that are at time machine prices, possibly that we haven't seen since 2015, 2016, 2017 type of thing, right? So these are the style of companies that I'm looking for. A few of the ones that might be missing, I need your guys' inputs for the last one. A few possible suggestions can be a company like American Airlines, right? American Airlines back to either COVID or 2012 prices. Company like Boeing, right? Boeing's been in the news because the doors keep falling off planes. They keep getting hit with lawsuits, but the share price isn't so much of a dumpster dive time machine price, right? Almost back to 2015 prices, but we had these prices in COVID and in the lows of 2020. So, but it is still a great, a decent opportunity, right? It does present one of those time machine prices. Not quite. I'd like to see it a bit lower, maybe the 150s, but maybe it could be a good one for now. Then there's another one, Pool Corporation. Pool Corporation is actually one of my favorite companies for a more value-oriented defensive investment. Now, they are significantly down off the all-time highs, but the prices that we can find right now are only about 4 years old. Would be really interesting to find them back in 2018, 2019, but they're such a solid company, guys. For all intents and purposes, they almost have a monopoly, guys, on a lot of different pool supply products across the United States and even in international markets. Think of all the cleaning agents and pool maintenance and upkeep tools and stuff like that. They own so many of the brands, it would make your head spin. Very strong company, could be up for consideration. Another one, even though it's ran recently, I'm very pissed that this one ran before I built the portfolio. Starbucks used to be at a very good level, right? Crushed share price, even though it wasn't that far back, right? It still was, you know, you could find the deals that you could have of the lows of 2022 and 2020 back in the lower $70 range, was up for consideration, but now it's a little bit too high in my humble opinion, right? Another company can possibly Lululemon. Lululemon are down, but only 2020 prices, right? Not really crazy in relation to a lot of other ones that are in our portfolio. Ulta Beauty, I mean, we can join Warren Buffett with this trade as well, back to 2021 prices, but not really crushed back to like 2016, 2017 prices, like we can find a lot of companies. These are just suggestions, right? If you guys have any, please bring them forward. Bed Bath & Body Works. This one could be interesting. You could find pricing of 2017 or 2012, right? This company really hasn't done anything. And for all intents and purposes, the last like 10 years of trading, right? Could be interesting to buy them at the lows right here. Another one could be APA. This is an oil and gas company that's really been beaten down hard over the last 10, 12 years of trading. Solid company, even pay a dividend, right? This one pays about a 3.41% dividend. Back to, you know, you can find this one recently, guys, but it's just in relation to 2016, 2018 as well, and then even 2003, right? So I know we did go lower here, guys, but we still are at very, very cheap prices in relation to the grand scheme of where this company once was. Another proposition, maybe like something like MMM, right? I know 3M has ran a lot off the bottoms. It was a great deal back here for time machine prices, right? 2013. But even now, I mean, you could find this back in 2022 or COVID or 2015. I know it's not the lows, guys, but I'm not going to wait, right? If we can add it right now, the stock pays a very juicy dividend too. If we can add this one right now, we still do get some 2015 prices nonetheless, even though we're not picking the lows, right? So those are just a few examples. As I said, guys, I still need 4 new companies for this portfolio. So if you guys have any suggestions other than the ones that I took a look at, please feel free to leave them down below in the comments. That's pretty much everything we had for today's video, guys. So the only time as well that I'll be adding to this portfolio is in the event we go into an actual hard landing recession and you find the S&P, the QQQs down 20, 25%. Microsoft, Apple, Amazon, all those guys down 25, 30%, right? Crazy discounts across the whole market. These stocks will probably be lower as well. And that's the only time that I will add to these companies. I'll throw in an extra $1,000, $50 each at whatever their share prices are at that time, and then we will just let it ride, right? That's pretty much everything I had for you guys in today's video. If you enjoyed today's video, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing if you're new as well. We do these videos every Monday to Friday after the close. And also, guys, if you have any questions at all or suggestions for the dumpster dive portfolio, throw them down below in the comment section. I would love to answer your questions and also hear your company suggestions too. And quick reminder, guys, we will be launching our Discord service on the Friday or the upcoming Saturday. It's coming, guys. Tons of beautiful services in there for you guys. We're going to be doing a lot. You're talking about private live streams 3 times a week, plus an extra one on Saturday that will be a topic specific one where I can even do portfolio reviews. So if you guys want to send me your portfolios via email and get my opinions on them, you can do that. There'll be a lot of real estate deal analysis in there as well. Short-term trade alerts, long-term trade alerts, high conviction company analysis. So many things that I'm going to be doing in the Discord, guys, for our members. So looking forward to rolling that one out on Friday as well. So take care, guys. I'll see you tomorrow after the close. Be a little bit careful with that jobs data. Peace.